Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Dear viewers, hello and welcome to today's video. This video is about the biggest disruption and value migration of the 21st century, which is unfolding right in front of our eyes. I'm speaking about the great EV transition. The world's smartest investors and corporates are betting billions on it. And even governments are offering the much needed policy push. It's like every piece required to make the EV transition possible is coming together now. It's nothing short of a revolution, and as the winds of change pass and settle, there will be a list of companies affected by the change. I believe that it's only a few that will be on the winning side. And I'm here to tell you that these winners are not going to be the players that you read or hear about in the media. Over the next few days, my colleague Tanushree and I will be sharing all about this transition at the industry and the company specific levels. But allow me to begin with why we believe that EV revolution is at a tipping point and the opportunity size it offers is huge. So what is causing this massive shift now? Well, let's travel a bit back in the history. Do you know that at one point in time, that is in the late 19th century, 1/3 American cars were electric? The discovery of cheap oil and mass production of internal combustion engine led to this EV share shrinking from 33% to almost nil. Well, the wheels are turning again, and this time it is EV that will propel and dominate the auto sector. Now I am not counting on the policy push, which is helping the transition for sure, nor I am betting on the pollution control commitments that the global economies have signed with provision for penalties in case of failures. The biggest reason for this transition will be battery cost. The cost of this component that comprises nearly 30 to 40% of the vehicle has come down by 89% in last one decade. In the next 2 years, it is going to decline by 20% more. And at this price, EVs will be cheaper than the internal combustion engine vehicles, making their mass production economically viable, not just for EV makers, but for the consumers as well. As EVs come back with a bang, it is going to be a gold rush out there. You see, at 1 crore, the global EV penetration is well below 1%. As per International Energy Agency, by 2030, EVs could grow 15 times at 30% annual rate every year over the next decade. As per global consultancy firm AlixPartners industry-wide, EV investments are planned at 25 trillion rupees. This will bring with it a tsunami of disruption and wealth creation opportunities. To understand how big this opportunity in India is, let's see how this revolution has unfolded in economies that are ahead of us in the EV shift. The United States, China, and Europe are the top 3 regions where the winds of EV shift have been blowing over the last 1 decade. India is on the same path as these economies were on a few years ago, and knowing their journeys will give a good sense of this opportunity. Now there are 2 ways you could look at this chart. The first is that the glass is half empty. We lag behind by a huge margin. The second, and not so obvious, is that the low penetration so far makes this opportunity size much bigger for us. And as Tanushree will share in the upcoming videos, there is a unique late mover advantage that India will benefit from as compared to the early movers. India is planning an $8 billion investment in the EV space, with EV incentives by the government, committed deadlines under Paris Agreement to bring down the pollution levels below certain level, and investments in the EV space by domestic companies, investments in charging infrastructure, sharp decline in the battery cost, and a shift in the consumer sentiments, the mass production of EV in India is hard to stop. In fact, this is already happening in the 2-wheeler and 3-wheeler space, the 2 segments in the auto space that I believe will benefit the most and very soon. With subsidies, the cost of ownership of a 2-wheeler is almost at par and even cheaper as compared to some popular internal combustion engine models. The bridging of upfront investment cost will further swing the buying decision in the favor of EVs. Even without subsidies, the total cost of operation, that is vehicle buying cost plus running cost and maintenance cost for a 2-wheeler and 3-wheeler EV is lower than that of internal combustion engine. Just to give you a sense, the fuel cost for a diesel vehicle for covering the same distance could be 10 times as compared to the fuel cost for an EV. All these factors lay the ground for massive production and acceptance of EVs in the 2 and 3-wheeler space. Now, India is a unique country in the sense that 2-wheelers comprise over 80% of the auto volumes. Now, if we look at our closest neighbor China, 80% of two-wheeler fleet is electrified. With low cost of ownership, comparable performance, and conducive charging options. That's because two-wheelers could be charged at home at minimal cost. The EV transition in two-wheeler space is on the accelerator. Here is how to visualize the size of this opportunity. In the last 5 years, two-wheeler sales in India stand at around 18 million units per year. Now, auto is a cyclical sector and has been in the downturn for some time. So, let's consider a moderate 5% growth for the next 10 years. At this rate, we are looking at two-wheeler sales of 29 million units per year by 2030. And with massive investments in this electrification drive, along with favorable economics and charging convenience, 1/3 of these could be electric vehicles. That is 10 million electric two-wheelers per year. In last 2 years, the average electric two-wheeler sales stands at 1.5 lakh units. From 1.5 lakhs to 10 million vehicles, that is 66x opportunity in the most potent two-wheeler segment of EV. This implies an annual growth rate of 52% over next 10 years and almost vertical growth opportunity. So what are EV manufacturers up to? Globally, Honda, General Motors, Audi, Ford, Nissan, BMW's Mini, etc. have announced plans to go fully electric. The list of companies going electric further include Toyota, Mercedes-Benz, Fiat, Hyundai, and Jaguar. Even sports car makers such as Porsche, Lamborghini, and Lotus are going full electric. And domestic players are harboring similar ambitions, be it Tata Motors, TVS Motors, Bajaj Auto, or Ola. Apart from Ather Energy, Hero is planning its own EV. Hero Electric has raised nearly 4 billion rupees to sell over 1 million electric scooters a year. TVS Motors is planning to invest rupees 10 billion in electric vehicles, and Ola is investing 24 billion rupees to become the global market leader in electric scooters, thus emerging as a real threat to established players like Hero Electric, Okinawa, Ampere, which is owned by Greaves Cotton, Ather Energy, and Bajaj e-Chetak, etc. I hope you can see that when it comes to OEMs, it's a Me Too phenomenon going on with adaptation to EV shift. This might seem like a gold rush, and it will be, but only for a few players. And let me tell you, these won't be the names that I've just taken. The real opportunities are somewhere else. To know where, stay tuned to my upcoming video on the EV.
Our new research uncovers some shocking truths behind today's hottest investment opportunity, electric vehicles. Don't invest your money in EV stocks before seeing our research. Click here to sign up for our special event to know it all for free.